Welcome back, and joining us on the show now is Sachin Jain. He's head of the World Gold Council in India. Sachin, hi. What the last 24 hours have been, the kind of jump up that we've seen in case of the gold prices. They're all-time highs and still holding around those levels as Asia also joins in case of buying. What is your sense of such sharp uptick that we've seen? The global central bank rate cut cycle seems to be beginning now. And where do you see the gold prices headed from here?
First and foremost, Manisha, thanks for getting me on. It's an absolute pleasure always to be on your platform. And as you said rightly, it's been a very sort of exciting, buoyant, crazy sort of times that we're seeing, particularly last 24 hours that you mentioned. And various reasons for that, as we all know, dynamics happening all around the world. But certainly, I think the way we see it is that more dynamics around the corner over the next 24 to 48 hours as well. Perhaps the next weeks of volatility that should be coming in. And hence, we all should approach it with a long-term view and not sort of see it from a one-week perspective, because volatility will move it up and down. That's the sense we get.
As you mentioned, it really is going to be about the global central banks. We have seen ECB react. It's the US Fed next week, Bank of Japan, Bank of England as well. Sachin, while we do understand that there's geopolitics and global central bank and the interest rate cuts that would all support gold prices going forward, but how bullish as World Gold Council are you from here in sense of prices?
See, let me give you a global as well as a perspective from India first, Manisha. So from an Indian perspective, we've seen, last couple of quarters has been very strong. Quarter two, which is April, May and June, where the pricing of gold was all-time high. Even then, the demand of gold just dropped by 5% in volume. And value-wise, we were very, very high up. Now, in July, we had the rate cut of the custom duty, which has really spurred the demand. And initially, there was, of course, a very heated time. Right now, the trading is almost happening at par. The demand for real jewelry is bound to increase. That's the view that we see. And and the biggest flow for ETF over the last very many years we've seen in the last almost 8 to 9 weeks. So, last 8-9 weeks has been pretty good from all fronts in India. So I guess the fundamentals tend to be strong, and there'll be physical demand as we go into the season. So that's the view in India. Now, globally, as you said, all the elements are playing up, which are about the geopolitics, which are about central bank buying. But one element that we see globally, which is getting more and more active, is the interest of the ETF, which is coming back. Now, we saw in the first 2 quarters that ETFs were booking profits and liquidating and sort of in cashing out. We've seen that trend sort of reverse, and they're trying to get back. So we'll see in the next few weeks where things end up on a global front.
Sachin, I know World Gold Council does not talk about prices, but 2,700, 3,000, 3,500 for the next couple of years are the kind of targets that we seem to be hearing in right now. Do you think those kind of levels, I'm assuming World Gold Council is bullish as well. You won't give prices, but you're bullish, right?
So we're bullish, Manisha, but I think we're also very cognizant. So we take the cognizance of what this will impact in terms of real consumption. Because, like in an Indian perspective, large part of consumption still is jewelry. And if the prices skyrocket at that level, there certainly will be a very different kind of consumption. And we'll have to study. I mean, we already are, undertaking some studies to envisage what a consumer would be doing if gold touches a lakh or touches higher than that. But I think a steady growth perhaps will be more healthy than a very buoyant one which goes up and down.
Oh, absolutely. So when we look at investment and when we look at retail jewelry buying within Indian markets, and I remember you telling me that 700 to 800 tons of an import this year is something that you're yet again working with. Have you changed those numbers at all? And number 2 is investment versus jewelry buying. How do you see those numbers stacking up?
Well, actually, let me answer the second question first, Manisha. So in the quarter 2, we saw that the demand for jewelry dropped by 17%. Of course, there were all-time highs of prices of gold. And the demand for investment bars and coins went up by 47% in volume terms and almost 76% in value terms. Now, that is something that we had never seen before. And investment bars and coins saw a lot of strength in quarter 2. Now, as we see in quarter 3, that continues. And the dip that we saw in demand of gold jewelry, that tends to sort of come back with the festive season starting very soon. So that's the outlay from an Indian point of view. And your perspective of whether we're going to be changing the number. So our view was 700 to 800 tons broadly for the annual consumption. We believe it should be still in the same range, perhaps slightly on the upper side of that range, is what we think. But end of quarter 3, we'll have the exact outlook for the entire year for you to see.
Oh, well, the higher numbers there. Sachin, as always, thank you so much for joining us and putting all of those numbers in perspective. So, well, yes, still bullish on prices, but yes, a steady pace on the higher side would not hurt the retail and the investment demand, because the kind of volatile moves that we are seeing in gold perhaps could dent that. As of now, we're looking at in the Indian markets a very steep discount working in because of the high prices. Not too many buyers out there. But with that, that's all the time that we have on Halftime Report. Business Lunch will take all the action ahead.